FY24 results conference call of Ramkrishna Forgings Limited, hosted by Emkay Global Financial Services. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity to ask questions after the presentation concludes. To assist the conference call, please signal an operator by pressing star and 0 on your touchtone phone. So this conference call is being recorded. And I hand the conference over to Chirag Jain from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you, Vikram. Good evening, everyone. On behalf of Emkay Global, I would like to welcome you all to this earnings call of Ramkrishna Forgings Limited. Today we have with us from the management team, Mr. Naresh Jalan, Managing Director, Mr. Lalit Jalan, Whole-time Director and Chief Financial Officer, Mr. Chaitanya Jalan, Whole-time Director, and Mr. Rajesh Mundra, Company Secretary and Vice President Finance. I shall now hand over the call to Mr. Lalit Jalan for his opening remarks, post which we will open the floor for the Q&A session. Over to you, sir.
Thank you, Chirag. Dear all, on behalf of Ramkrishna Forgings, I would like to extend a warm welcome to everyone. I am along with me, Mr. Naresh Jalan, our Managing Director, Mr. Chaitanya Jalan, and Mr. Rajesh Mundra, our Company Secretary. The company has worked hard and stayed determined to these ongoing global challenges. We are a flexible and successful organization that thrives on challenges, and we take advantage of opportunities that come our way, such as expanding our business, improving productivity, and making sure our customers are satisfied. We become an important part of the global market, even the world economy is still weak right now. The good news is that the things will improve with time. We are committed to getting more customers and getting ready for business growth when the market conditions improve. We are also increasing our capacity to support this growth. As a company, we are prepared for the future. Over the past months, we achieved significant milestones that have further solidified our position in the industry and propelled us towards greater success. I am pleased to announce that we have recently incorporated a company, Titagarh Rail Wheels Limited, in collaboration with Titagarh Rail Systems Limited. This strategic partnership brings expertise and resource of both organizations, paving the way for opportunities and accelerated growth in the sector. Our consortium, TWL, has signed a significant contract with the Ministry of Railway, Government of India under the Atmanirbhar Bharat initiative. This contract entails the supply of 1.54 million forged wheels, further solidifying our commitment to support the growth and modernization of the Indian railway sector. We take immense pride in contributing to the development of our nation's infrastructure and being a part of this transformative initiative. The board has also approved acquisition of Multitech Auto Private Limited and its wholly owned subsidiary Malmatrix Private Limited. The company has a capacity to manufacture 21,600 metric tons per annum machine, SG and CI castings, and bar draw facility of 6,000 metric tons per annum. This acquisition marks a significant step forward in the company's strategy aimed at expanding its product line and fortifying its presence in the passenger vehicle, light commercial vehicle, and heavy commercial vehicle segment. During this quarter, the company has secured a prestigious order worth 4.5 million euros from a prominent European railway passenger coach manufacturer. The achievement highlights the trust and confidence the global industry leaders place in our capabilities and products. In addition to these, I am delighted to share that our company has commenced commercial production of 1,700 tons per annum of RA shaft baseline and 10,100 tons for the 5-inch stator. The significant expansion in our production capacity, 3,800 tons per annum, will strengthen our ability to meet the increasing demand for high-quality forged components in the automotive industry. In addition, our production capacity now stands at 10,900 tons per annum, reaffirming our commitment to delivering excellence to our valued customers. We are also pleased to witness a rise in demand for our products and services, resulting in substantial growth in both revenue and profits. In Q1 FY24, we recorded revenue of INR 836 crores, approximately representing a year-on-year growth of 28%. Our EBITDA margin for Q1 FY24 is 20.4%, 35 basis point year-on-year. We are confident of sustaining and improving this margin. The net profit after tax was 77 crore for Q1 FY24, which is year-on-year growth of 60%. This is added lower tax also. As we move forward, we remain committed to innovation, operational excellence, and customer satisfaction. We will continue to invest in advanced technology, enhance our manufacturing capabilities, and strengthen our relationship across the industry. Foundation we have built and the achievements we have accomplished, I am confident that we will excel and thrive in this dynamic and competitive market. Thanks, and thanks for continued support. That's all from my side.
Thanks. Should we now open the floor for questions?
Yes.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants to use hands for asking a question. We will wait for a moment while the question assembles. To ask a question, please press star one now. Take our first question from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead.
Congratulations on the good number, sir, and thanks for giving the opportunity. Can you share the outlook for Ramkrishna, and also what would be for India and US CV industry? And in terms of new orders, how to ramp up of new orders, the new orders that will ramp up in next year, sir?
I think Mr. Jalani is not on the call.
Hello. Hello. Hello.
Yes.
Hello.
Yes, sir.
Yes. What we see as a market is extremely robust right now within India as well as in North America. And in terms of RKFL, we are extremely confident to exceed growth expectations which we had set at the end of FY2023 full year results. So we are on track. We are doing better than what we had guided for.
And sir, how do you see the ramp up of this new cold forging capacity and products in segments, sir?
Cold forging capacity is going to start generating revenue only next year, FY2025. The presentation also we have highlighted that this year, by end, the cold forging facility come up, and we have already received the firm order book for the entire capacity. The revenues are going to be in place in FY2025.
Any contact to share what you're seeing from this facility?
No, we would not like to put a number to it, but this will be entirely to EV and PVs.
Okay. And sir, can you guide what the expectations for the FY2024 and 25, and also investments for the acquisition, sir?
Sir, FY2024, we are looking to have around 300 crore, and acquisitions still are in the NCLT stage, so let come like GMT Auto and ACIL. As we have already given the guidance on what we would like on that, but we are not commenting on that once let the NCLT first. On the Titagarh Rail System and WL Consortium, there we have a project cost of around 1,400 crore. Out percent will come from ED, and that has to be contributed over a period of 3 years by each partner. So 1/3 can be contributed each year by each partner.
Got it, sir. And on GMT, as you expect very soon to happen, sir, any to share on the revenue and profit of this business, sir?
No, we would like to share that only when after NCLT approval. Because I think Indian legal system, we do not have any clarity, and in terms of timelines, so we have not built any expectation in terms of what business and how much business we can do. We would comment only after we get the complete handover of the plant.
Got it, sir.
I'm sorry to interrupt, sir. Please come back to the question, please. Ladies and gentlemen, in the interest of time and fairness to all participants, kindly restrict questions to for participants. If you still have more questions, please join the queue afresh. We take a next question from the line of Raghunandan N from Nuvama Research. Please go ahead.
Thank you, sir, for the opportunity. Congratulations on great set of numbers. My first question is on Multitech acquisition. So you have indicated the presentation that additional revenue of 5 to 6 billion can be contributed in the first 2 years. If you can give some color, whether what gives you the confidence for this kind of revenue visibility, and on Multitech, if you can give some more detail, how is the existing profitability and debt position?
Yeah, coming to the numbers, if you like to Multitech, there is a net gross debt of around 45 crore as on date, and EBITDA margin is in the range of 14% right now, and the line for is 300 crore plus.
Correct, sir. And any what is that hope or visibility of that improved revenue potential? Any color you can add there?
No, I think Raghunandan, this cost is complementary to what we have installed in terms of forging facilities. And I think our entire endeavor to buy casting was with the mindset of next 2 years into a complete assembly supplier rather than being a component supplier, being in product platforms. And casting, manufacturing our own casting and assembling it, forging, we are entered biggest markets of trailer axle and differentials. And I think we are confident that within next 1 year, we will be able to start productionizing, and we go into full volume in next 2 years in those platforms, which are a growing market going ahead.
Good to hear that, sir. Wishing you all the best. My second question, like company had garnered order wins of about 7.7 billion, 77 crore in FY23. Can you roughly indicate how much of new orders will commence in FY24? Add, say, 150, 200 crore additional revenue?
Almost, I think, almost, Raghunandan, 5% of last year's order wins. I think from second quarter onwards, you start seeing that in revenue. As you may have seen, some has already started in last quarter itself, and that's the reason we have been able to do better exports vis-a-vis year on year. And second, third means for the next 9 months, we see our exports growing much better than what we expected because of most of these orders getting into convert to supplies.
That's wonderful, sir. Last thing on just the house part, export incentives is on the higher side. Is it likely to sustain? And another house thing, other income is on higher side, whether it includes any one-off like forex gain?
Yeah, other income, you rightly said, is on the basically loan liability, foreign exchange loan, forex loan. There is a gain. That's why other income is on the higher side. So that's depend upon the foreign exchange demand. Rest other gains, or you can say export incentive, that will be sustainable.
And in terms of forex gain, is only I think to the tune of
3 crore.
Not the entire 3 crore rupees, and not
3 crore rupees.
3 crore rupees is only the foreign exchange gain in the other income.
Got it, sir. Just a clarification here. Export incentive as a percentage also looks higher. So when you say it is sustainable, if you can throw some light there.
Just Raghunandan, let me go to that slide because
Generally, if I look last 2 quarters, export incentive is in the range of 6 to 7 crore per quarter. Quarter it's about 13 crore. So is there a change in rate or something like that?
No, Raghunandan, what you are looking at 12 crore number, that includes other income of 4 crore something. Okay.
Okay.
And
Got
so that's
it.
why your
Got
number
it.
looks a little elevated. Okay.
Thank you so much for the clarification. I'll come back in the queue.
Thank you. With that, can you restrict questions to participants? Take the next question from the line of Garvit Goyal from Anvest Research. Please go ahead.
Hello. Good evening. Am I audible?
Yes, you're audible.
So my question is on the margin side. In past 3 years, we did a deep improvement in our EBITDA margin due to operating leverage. Now we are focusing on warm forgings and, as you mentioned in the recent presentation, in cold forgings as well, which is obviously a high margin thing. Plus, we are also saying the JV will be similar margin. So my question is, considering all this, can we assume the OPM percentage will convert action from here, like these percent kind of margins will be a base margin for the company going forward?
Yes, these margins which are there is going to be sustained, and we are looking at our aspirations are to go into much better margin, but at least 50 to 100 basis points you will see changing year on year basis.
Understood, sir. And so we are entering into the railway part, like this new company that we are getting to. So we are planning to get a railway as an industry forward. My question is on the data realization side, like working is how it will shape up with this kind of project we are taking.
I think in terms of railways, payment is much better than what we are doing right now. So 98% or 95% of payment comes within 7 days of receipt of material in the railways. So I don't, in terms of percentages, I think it must be much lower than what is currently being standalone basis in RKFL. In the railway business, sectors are working will not going to get stuck in system in terms of debtors in the long run.
And sir, you mentioned volume growth into 20% last quarter. Now you are saying it may exceed, right? So what kind of number you will like to put?
I am not saying that we will exceed. I am saying we are extremely confident of achieving and bettering that number of what we had guided in the full year call.
This is sir. And one last question on this CV industry, like in this particular quarter, in India, in the CV industry, Y on Y there is a muted growth of 3%. How do you see this particular thing, like going forward?
No, I am not basically tracking what industry is growing at. I am tracking what RKFL is growing at, and we are extremely confident to better our overall growth numbers of 50% volume growth for coming 4 years. So the capacity getting augmented continuously, and the new generation of forging which is coming in, we will continue to add new segments, new components, which will aid growth much better than what industry is doing. So that's the reason we are not dependent much on what percentage of industry is going, but if it remains stable, we will be able to do much better than what we have guided for.
So, how many years do you see the stability of these growth numbers? 15 to 20%?
How many years? Basically, what vision or what business plan we are working to is next.
Understood. Thank you very much, sir, and all the best for this.
Thank you. Take the next question from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah, hello team. Great set of numbers. A couple of questions. Firstly, sir, on this acquisition, if you could give us more details regarding their, how are the financial metrics with regards to the asset turn and the working capital? How is it for this set of products? Secondly, what sort of synergies can we have with this acquisition? So I was just going to the website, so it also mentions Ramkrishna as their client. So I mean, tell us the synergy and the 14% EBITDA margins were reported. Can it be improved further? Yeah, these are my first 2 questions.
I think in terms of margin, we are extremely confident in next 2 years to significantly improve the margins on standalone basis in Multitech. I think at least 200 to 250 basis points improvement 2 years in terms of margin on a standalone basis. A synergy basically with the acquisition of casting and with the acquisition of Multitech. Now we are almost, except the sheet metal, and tires and engine, we are available across all platforms in any vehicle which is moving on road. And like you have seen in the slide, RKFL is one of their customers, so we use their component assemblies, some assemblies which we have already started. So now we can aim casting into much bigger platforms which can be highly EPS active for RKFL on a standalone basis going forward in next 2 years. And I think in our presentation we have already shown 2 different platforms in coming future which we will be launching in RKFL's purview with the support of Multitech casting. And I think that's be a game changer going forward for RKFL.
Interesting. And what do they do in railways? Is it a larger product segment for them, or it's purely a trailer?
No, it's a small product segment for them in railways. So railway requires quite a good amount of castings also. So basically with this now we can go to customer and offer them entire gambit of components or product assemblies which are required in forgings and castings by a customer to manufacture a vehicle.
Okay. And sir, this company also has a 100% subsidy, but while mentioning, you always mention standalone number of 300 crore. And I think the subsidy also has significant amount of revenue. So what is the size of the subsidiary and what is that?
No, I think this 300 crores revenue captures the subsidiary revenue. We have just knocked off interrelated transactions in the companies, and this is the revenue which is in outside sales except the related transaction is 300 crores.
Okay. So then Mal Metallics is included into it.
Yes, everything is included, consolidated, and 300 crores with around 14% margin is the current operational, and their asset turn is close to around 1:3.
1:3 asset. And working capital?
Working capital is around 60 days. Net working capital is around 60 days.
60 days. Okay. Thank you. I'll come back in this.
Thank you. Take the next question from the line of Abhishek from Dolat Capital. Please go ahead.
Congratulations on the very challenging times. Despite a weak MSP domestic industry volume, your volume remained strong this quarter. It's because of the new business we in domestic market?
I think it's Abhishek, in terms of new order wins as well as new launches which we have done over in this quarter. And I think for us, I don't know from where this slowdown or weak market from we are going in Q2 with a very strong demand scenario, and we expect full year to be extremely strong in terms of our own manufacturing is concerned.
As industry participants, I mean the OEMs are riding around 7% volume growth in the MSP segment. So most of that you will outperform the industry growth because of the new businesses?
Yes, and we will continue to do that. And I think, like I answered previous call, we stick to our guidance, and we can confidently say that we will be doing better than what we have paid for.
So, can you explain that what can be the growth rate in domestic versus export for 24?
Can you question?
Sir, what would the growth rate in domestic versus export in FY24 or what the mix?
We basically mix should be on the same 40 or 38% here and there, but we continue to look at 60-40 domestic and exports market as, and both the sectors are doing extremely well for us, so we continue to do that right now.
And you have mentioned that total CapEx would be around 300 to 3 billion in FY2024. This is including the CapEx for this pillar projects?
No. What we have said, 300 is for the CapEx. What the RKFL is doing, whatever the investment, that will be separate.
Okay. And so most probably that you will go for the equity dilution because there will be
No, there is no question of any equity dilution. We see operational cash to be deployed prudently in the system to basically augment capacity, create new investments, and create new opportunities. But no equity dilution, even in thought process in coming days, coming months, or coming year.
Thank you, sir. That's all from my side.
Thank you. We take the next question from the line of Pul Shah from DAM Capital. Please go ahead.
Sir, congratulations on a very strong performance and thank you for opportunity. So first question is on raw material side, as raw material already started cooling off. But when we look at your raw material per ton basis, there is an increase of 3% on a sequential basis, 1%. So can you explain this? And on the production side also similarly, when we look at your production number versus your sales volume, there is a huge difference. For example, your segmental volume number is 38,000, which is more or less flat compared to last quarter. But your production is significantly down from 48,000 to 54,000. Can you clarify this?
So in terms of production, I think first 7 to 10 days in the month of April, we take do annual maintenance of most of our presses. As well as you are aware that extreme heat during month of April and May until mid of June, ultimately labor fatigue or heat, there was a production disruption or slowdown in terms of production is concerned. So I think 40,000 outcomes which we have achieved is extremely good as per our achievement, we can say. And in terms of sales, I think that floating inventory is always there, and that's we are trying bottleneck, so whatever we produce we can 100% sell. And in terms of RN prices, I don't know from where you got 3% number of raw material cooling or raw material prices dropping. Yes, when we see television or news channels, yes, we see that steel prices have gone. We are determined. We are basically buying steel at customer-directed suppliers and cost. So basically, we have not seen any decline in alloy steel market till now. And if and when it comes, you will automatically see the reflection in our balance sheet also as steel price decline.
Your price has gone up. That is what I'm clarifying. That price is.
So basically, the price of steel has gone up because of alloys. Nickel, moly, whatever we use, they are basically alloy element pricing, which may have increased at that period of time.
Understood. Second question on a long-term basis. When we earlier highlighted When we highlighted for non-auto segment contribution to reach to 30% overall in next 2 years. But now this acquisition again entirely from the auto side, so further it will reduce our non-auto contribution below 20% or maybe close to 12%. So what would be roadmap for going forward?
I think the roadmap in terms of getting into non-auto business is intact, and we will to achieve that on a standalone basis of RKF. In terms of acquisition or investment which we have made into this is basically getting into new platforms and new businesses of product lines rather than being a component supplier. So you need to look at things on a separate way. In terms of RKFL, who are only one of the lead players in making forgings and components, we are targeting into non-auto, auto, and we will achieve this figure of 30 to 70. But addition of Multitech will give us also bigger volumes in terms of reaching product line category which we were never at. So we will be able to into the B2C market of developing our own products and branding at that RKF brand name, selling this into the market.
Yes, sir. Thanks. Lastly, sir, out of all these ACIL, JMT, as well as this and Multitech, any of these companies has any meaningful non-auto contribution at present, or in a shorter period, can we do some ramp up there for non-auto side?
He has a very meaningful non-auto presence, but we will be able to comment only when JMT comes in. Multitech has only 5 to 7% non-auto segment. So opportunities of supplying castings to railways and other off-highway and other applications are huge. And probably the management bandwidth of the company we have acquired was not that to go into those markets. Our own expertise and market, obviously we will be targeting that market. And I think overall we are very confident that we will be able to stick to our guidance for 730 non-auto and auto business.
Thanks and all the best, sir.
Thank you. Take a next question from the line of Andre Purushottam, Cogito Advisors. Please go ahead.
Yeah, hi. This is Sangeeta Purushottam, Andre's partner. Sir, I just wanted to ask you about your plans to reduce debt to zero, which is what you had guided earlier, I think 25 or 26. And in the presentation, I noticed guidance now is that your, you plan to bring it down to 1:1 debt to EBITDA. So are you now willing to live with higher levels of debt? Has things changed a little there? Could you elaborate, please?
Ma'am, I think you are going back when we were raising equity, we had thought at 1 year back when we were in round for a QIP, at that time we were looking at raising equity and paying off the debt and being a net company. But with the operations doing extremely well since last quarters and the cash flow which we have in system, we want to grow the business rather than diluting, and that's the reason our presentation states, and we have been since last several quarters in our call also has said by FY25 and the debt to EBITDA 1:1. So we are not looking at a higher debt. Basically, we are looking at a lower debt. We used to have more than 1:3 times, 1:2.8 to 3 debt. We are looking to, we have already got debt with 1:1.55, and we are looking at next couple of quarters or say 6 quarters from now, 7 quarters from now, at 1:1. So obviously, we are looking at success with growth we have also in mind.
Right. Okay, sir. So, because I remember asking the same question actually about 3 or 4 quarters ago, I think, and at that time you had said that internal cash flows would be sufficient to pay down debt, and your target was to bring it down to zero. But now I'm assuming that you're willing to just reinvest that business, and you're comfortable with things like that, right? That's
yes,
what's
ma'am. 4 quarters or 5 quarters back, we are thinking, we exactly had said that, but we had said that we will not then reinvest money in the company. We will generate enough cash to pay the debt, and still if you see, if we are getting that kind of cash, and if we do not commit fresh capacity, and we keep growth stable as where it is now, obviously we will have enough money to pay off debt. I think we would rather want to grow the company, grow the balance sheet, rather than being a debt zero company.
Right. Okay. And in terms of your average interest cost, what would it be right now?
It's around 8%, ma'am. 8% per annum.
And is that likely to remain the same, or any chances of it
I
coming
think
down?
interest rate has peaked out. So it will not go up from here. We see that maybe marginal corrections going forward in next 2-3 quarters.
Are there any rate changes expected, or?
Rating was changed in the month of February, so we expect revision now again after 3 or 1 or 2 more quarters.
Okay, thank you.
Thank you. A reminder to participants, if you wish to ask a question, please press *1 on your touchtone phone now. Take the next question from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Hi, sir. Good evening and congratulations on a great set of results. So I think most of my questions have been answered. I do have a few basic questions. So our new acquisition being consolidated by what time? So when will the acquisition be through of Multitech?
Multitech acquisition SPA has already been signed today. The change of equity and handover of the organization is going to happen by month end. So we can expect at least 8 months of consolidation in this year.
Q2 will have revenue of Multitech. What
for 2 months.
Right?
2 months. Yes.
Okay. That's great to know, sir. And I just also want to ask, sir, any risk that you see, that can be roadblocks to our, path to growth? Any risk that you could see?
I am extremely optimistic, and with the market performing so well for us, I don't see any risk unless there is a sudden change in the government or policies of the government. Ultimately, we are all going to get affected. But unless global situation remains what today, we don't see any risk to it.
Oh, so that's great to hear, sir. And just on our new JV with Railway, also how would the timeline work? Like, how would we allocate capital and what way will we start the production? We will give some rough.
I think Lalit has already given the figure that we will be funding project 30% equity and 70% debt. Out of the 50%, the 50% contribution we will need to bring in next 3 years' time, and we are looking at start production by FY20 calendar year 26. May we hope to start the production of first batch for approval.
Oh, okay, great, sir. Thank you so much. That answers all my questions. All the best for future quarters.
Thank you. Take the next question. Line of Simel from Negen Capital Services. Please go ahead.
Yeah, hi. Good evening, and thank you for that question. The expansion into the warm forging piece looks promising. Can you provide me more insight into the product mix along with the customer segments that are targeted for this capability? And when do you anticipate reaching optimal utilization, if that might also fit?
The warm forging facility which we have augmented to basically differential parts, differential gears parts only, and the main segments right now we have already started bulk supplies to commercial vehicles. We have already started submitting samples in the tractor industry and also PV industry. So we look at targeting all the 3 industries, and I think we are right now at almost around 35% utilization in this capacity, and I think by the 4th quarter of this year we should be around 50%, and next year we are looking at run it at a full volume.
Okay. How much do you expect them to contribute to the revenue growth and the margins in the near term?
I think more than revenue, we are looking at margins from this, and I think in terms of tonnage, I think it is very difficult to say, because the warm forging because the market from CVs to passenger vehicle, so there is a different tonnage, and all about number of pieces we can sell, and we are looking at basically extremely high margins from this. So that I think is showing in our balance sheet from 3rd and 4th quarter of this year.
All right. Thank you, and wish you continued success and growth in the future. Thank you.
Thank you.
Thank you. We take a next question from the line of Chirag from White Pine. Please go ahead.
Yeah, thanks for the opportunity. And sir, congratulations for good set of numbers and a very good presentation, sir. I have 3 questions. First, a slightly broader one on the management bandwidth. How are you looking to access? Because when I look at the presentation over the last 4 years, you have entered into many new products and new segments, and once the acquisition happens, furthermore acquisition of segments will happen. So between traditional business and new businesses, how are you managing your strength, and what are you doing?
Chirag, every business comes with people only, and I think RKFL is a thoroughly professional run company. The entire leadership team within the organization which handles each and every segment and every portfolio independently. So obviously every platform is manned by a leadership team. So I don't think there is any full challenge. I think people are in the business, they are growing as the business grows.
Sir, if you have to look at from a 5-year perspective, between this traditional forging business that we have, plus when I consider the press business that we have, so I'm including the cold and warm forging from that, plus the railways and the other non-auto piece. So how should we look at the broader picture or what to aspire to have it over a 5-year view between all these 4 or 5 pieces that we have? And I'm excluding the acquisitions that are yet to happen.
Chirag, we are looking at growing in terms of 15% volume year on year continuously for next 3 to 4 years time. The visibility and the landscape we have created for ourselves, we are very confident to have 50% volume growth. And for this, I think in terms of capital, in terms of people, I think we are on it and we have completely laid out roadmap to achieve targets.
Sir, so last just a clarification on this cold and warm forging. So this 20,000 ton that you have mentioned in presentation is the additional capacity, right? We already had some cold forging capacity
No, we did not. We have zero cold forging capability right now. We have warm forging capability right now. We are installing a cold forging capability for which we have already received complete sold out order for 7 years, which will start operations from FY2025 first quarter.
Okay, sir. So one last question, if I can squeeze in, and is on this differential business. So the business that you're referring to is more about differential axle type of the business, or looking to differential assemblies for passenger vehicle, differential gear assemblies?
We are looking for differential for not only for passenger vehicle. We are looking for commercial vehicle. We are looking for even electric vehicle. All the 3 segments we are going to have our own product line in next 2 years time.
So why I was asking is traditionally in the ICE category, assembly business is done in-house. And in EVs,
I think with coming days, everybody is offloading everything outside and want to have only assemblies.
Wow. So even in ICE, you are expecting this change, and I presume this is more domestic driven for next 12-18 months, or it's
both export and domestic driven.
Okay, sir. Thank you and all the best.
Thank you. A reminder to participants, if you wish to ask a question, please press star followed by 1 on your touchtone phone now. The next question from the line of Kaushik Mohan from Ashika Stock Broking. Go ahead.
Hi, sir. Congratulations for the good set of numbers. I have a very specific question. The Q1 in your presentation that you mentioned, railways has increased their revenue contribution, which comes up 2.2%. Visibility of wheel segment division and some more divisions of railway segment. What do you think has a revenue? What percentage of this segment can be?
I think railway should be doing anything between 4 to 4.5% in this year on a full year basis.
Okay. So my second question is also what kind of margins that you have in the wheel segment in new business?
I think it's too early for me to comment on the wheel business. We will go with the type that let us first establish the plant. We are still negotiating for the equipment. We are still negotiating for the every detailing is going on. So it is right now not prudent for me to comment on profitability of the plant. I can only tell you that this plant in 2 years of operation will be better positive, and I think we are looking at a 5-year payback for the entire investment we make from wheel plants.
Okay, thanks for that. And the last and final question, sir. I just wanted to understand what kind of volume growth that we're expecting for full year basis from this.
Can you repeat the question, please?
What kind of volume growth that we're expecting for the year?
I think we are looking at least 15-20% minimum volume growth this year from our current operations.
Okay. This is the minimum side, right?
Yes.
Okay, thanks.
Thank you. We take the next question from the line of Priyam Daga from Cap. Please go ahead.
Hi, sir. Thank you for taking my question. So my question was regarding the new acquisition, Multi-Tech Private Limited. So the company did a turnover of around 300 crores in FY23, and we are paying around 205 crores relative to equity. So my question was regarding why are the promoters willing to sell the company at a price range of around 0.7 times? I mean, that's quite cheap. So what is the thought process behind the promoter of that company selling it to us?
I think you should go and ask the promoters of that company. How can I tell you what is there in the mind of the promoter of the company and why he is selling at that price? How can I comment on that? We know that we have done a good deal, but obviously I cannot say what is running in the promoter's mind and why he is selling it at this price. I can only tell you that I have bought a good asset at a good price, and it is going to be value accretive for me and my investors in RKFL. But I cannot comment on what makes the promoter of Multi-Tech sell the company.
Right. The valuation is quite attractive, hence the question. But yeah, that was the question. Thank you so much, sir.
Thank you. We take the next question from the line of Chirag from White Pine. Please go ahead.
Yeah, thanks for the opportunity again. Sir, I had a question on one of the acquisitions that you indicated, SIO, and it seems to be more on the motor than controllers. Any thoughts why you are looking at that space? Because that seems to be a crowded space in general.
No, I am not looking at that space. I am looking at be a consolidator at EV, motor, controllers, differential, and EXL. These are the complete platforms in next 2 years. Rationale behind buying SIO we have already given in our earnings call previously.
Yeah.
Basically, it is only a stepping stone into a bigger platform of supplying complete differential, EXL, and motor controllers. So we are not looking at just motor controller in an isolated form. This is one of platforms we have entered to make a bigger space in EV to supply this entire set of platforms, which makes our overall exposure into EV in a bigger way.
And again, the focus of this entity would be more domestic, at least in the initial 3-5 years?
Yes. Initially for 3 years, it is domestic.
The focus is domestic. And one last question, if I can. So the journey from component to assembly, are there any changes in the business model, the way you approach the customer and the approval process, how much time it takes? If you can elaborate on that. Because it's
I think
a significant impact on your with that particular OEM where you are able to make the journey.
I think whatever platforms we are entering, it's a non-OEM business of trailer axle is a non-OEM business. Differential, we are working with OEM to supply them the differential. We are not looking at being a competitor to the OEM. We are looking to work with the OEM to bigger competition.
No, because they must be doing that, right? Already somebody...
OEMs are not manufacturing trailer axle.
No, I'm saying the assembly. OEM may be acquiring via an assembly model already, right? No.
Trailer axle is a B2C business done independently the people who make trailer bodies.
Okay. So that's the white space available that nobody's putting right. So that's how you are looking to...
That's not an OEM business. That's a B2C business. We are and highly profitable business. We are wanting to enter in a big way in B2C business.
And by when do you think all the pieces will fall in place for you?
I think we are looking to get approvals for this, or say there is a system of approval of the axle. We expect by March the approval to be in place, and next year to start the markets with our own production. But full volume at least 2 years time before we reach peak volumes.
And this will be more domestic driven?
Yes, it's most domestic driven.
Domestic driven. Okay. Yes, sir, you are saying something. Sorry.
Basically, this is basically what I want to say. This is a business, non-OEM business, a B2C business, and it's a brand play. And I think we are extremely confident that brand RKFL or brand Ramkrishna is doing extremely well right now in the commercial vehicle industry. So we will do garner at least 50% market share in next 2-3 years.
Okay. Thank you. Thank you very much and all the best.
Thank you. Take the next question from the line of Garvit Goyal from Anvest Research. Please go ahead.
Hello. Thanks for the opportunity again. So just a clarification, kind of we did PAT of 78 here in this quarter. So are we able or are we confident to maintain it going in next quarters?
I'm not able to understand the question, please.
I was thinking about the run rate of PAT, like we did 78 CR in this quarter. So can we maintain at least this in next quarter?
No, I think our tax rate has come down. And Lalit can comment on it exactly.
No, so I think you are asking about the PAT run. PAT rate is certainly going to improve from here on, because we have given a guidance on the volume growth. So when there will be a volume growth, certainly it will be improved in overall EBITDA and PBT margin, and it will have PAT itself. So it's not going to end here. I believe from here on.
Okay, sir. Okay, thank you, sir. Thank you very much.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session, and I would now like to hand the conference back over to management for closing comments. Over to you, gentlemen.
Thank you. Take this opportunity to thank everyone for joining the call. Wish all a very happy weekend, and we hope that we have been able to address all your queries. For any further information or assistance, you can get in touch with us, Investor Relations Advisors. Thank you very much for joining the call.
Thank you very much, ladies and gentlemen. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.